Question 1. Which of the following is not a primary objective of underwriting in insurance? A. Risk selection. B. Premium determination. C. Risk classification. D. Claim management. Answer D. Claim management. Explanation. Underwriting primarily focuses on assessing risks and determining the terms under which insurance policies are issued. The main objectives include risk selection, choosing acceptable risks, premium determination, setting appropriate premiums based on risk, and risk classification, grouping risks into categories such as preferred or substandard. Claim management, on the other hand, is a function handled by just as once the policy is in effect rather than during the underwriting process. Question 2. Mr. Davis is applying for a property insurance policy. During the underwriting process, the insurer identifies that the applicant's property is located in a flood-prone area. What should the insurer do in this situation? A. Deny the application immediately based on flood risk. B. Issue the policy with standard coverage and exclude flood coverage. C. Offer the policy with an increased premium to cover the additional risk. D. Offer the policy with no adjustments but advise the applicant to seek flood coverage separately. Answer C. Offer the policy with an increased premium to cover the additional risk. Explanation. In underwriting, when a property is located in a high-risk area, such as a flood-prone zone, insurers may offer coverage with higher premiums to account for the additional risk, while exclusions or separate policies may sometimes be offered for specific risks, such as flood coverage. It is common for insurers to adjust premiums in high-risk situations instead of outright coverage or offering no adjustments. This ensures that the insurer is adequately compensated for the increased risk. Question 3. Which of the following best describes the role of automated underwriting systems in the underwriting process? They solely determines the risk classification without human involvement. B. Automates the data collection process but does not influence underwriting decisions. C. Speeds up underwriting by analyzing large volumes of data and providing risk assessments to assist human underwriters. D. Replaces the need for manual underwriting in all cases. Answer C. Speeds up underwriting by analyzing large volumes of data and providing risk assessments to assist human underwriters. Explanation. Automated underwriting systems are used to streamline the underwriting process by quickly analyzing large datasets and providing initial risk assessments. While those can significantly reduce the time required to process applications, human underwriters still play a critical role in reviewing cases, making final decisions, and ensuring compliance with regulations. OS is a tool that aids underwriters rather than fully replacing them. Question 4. Which of the following is the primary reason for using experience rating in underwriting? A. To adjust premiums based on an individual's claim history. B. To increase premiums for high-risk applicants without considering their claims history. C. To offer lower premiums to applicants with a history of making frequent claims. D. To determine premium rates by comparing the insured's claims history to industry norms. Answer A. To adjust premiums based on an individual's claim history. Explanation. Experience rating is a method used in underwriting where premiums are adjusted based on the applicant's own claims history. Insurers use this technique to reward applicants with fewer or no claims with lower premiums, while penalizing those with higher claims experience by charging higher premiums. This ensures that the cost of insurance better reflects the risk posed, insured's past behavior. Question 5. In which of the following scenarios would an underwriter most likely apply a substandard risk classification? A. A young, healthy individual applying for life insurance. B. An individual with a significant history of serious medical conditions and a risky occupation. C. A person with no previous claims history and a safe driving record. D. A homeowner living in a region with very low crime rates. Answer B. An individual with a significant history of serious medical conditions and a risky occupation. Explanation. A substandard risk classification is used when an applicant is deemed to pose a higher than average risk due to factors such as serious medical conditions, hazardous occupations, or other risk factors. These applicants may still be offered insurance, but at a higher premium to account for the increased likelihood of claims. This classification used to balance the increased risk the insurer assumes. Question 6. MS. Green is applying for health insurance and her application reveals that she has a chronic illness that was diagnosed 2 years ago. The insurer reviews her application and requests additional medical documentation before making a decision. What is the most likely reason for this request? A. To evaluate her eligibility for a higher premium rate. B. To assess the severity and expected costs of treating her chronic condition. C. To comply with state regulations requiring additional medical information. D. To deny her application based on her pre-existing condition. Answer: B. To assess the severity and expected costs of treating her chronic condition. Explanation: when an applicant has a chronic illness, insurers typically request additional medical information to fully understand the severity of the condition, potential treatment costs, and its long-term impact on the applicant's health. This helps the insurer determine the appropriate premium rate and decide whether to offer coverage, what exclusions or modifications may apply, if the applicant's condition requires specific terms of coverage. Question 7, scenario question. Mr. Harris, a small business owner, is applying for property and casualty insurance. During the underwriting process, the insurer discovers that Mr. Harris has a history of several small claims over the past 3 years related to employee injuries. What action is the insurer most likely to take in response to these findings? A. Deny the application outright due to the number of claims. B. Offer a policy with a higher premium to cover the potential risk of future claims. C. Offer a policy with standard terms and no adjustments for the past claims. D. Require Mr. Harris to implement safety improvements before offering coverage. Answer: B. Offer a policy with a higher premium to cover the potential risk of future claims. Explanation: when underwriting a policy for a business, insurers consider the applicant's claims history to assess the risk involved. In this case, the history of employee injury claims is a potential indication of higher future risks. While the insurer is unlikely to deny coverage outright, they may adjust the premium to account for the higher potential for future claims insured. Policy reflects the risk posed by Mr. Harris' business operations. Question 8. What is the role of the North Carolina Department of Insurance (NCDOI) in the underwriting process? A. To set premium rates for all insurance policies sold in the state. B. To monitor underwriting practices and ensure compliance with state regulations. C. To process all insurance applications submitted in North Carolina. D. To offer training and certifications to underwriters in the state. Answer: B. To monitor underwriting practices and ensure compliance with state regulations. Explanation: the North Carolina Department of Insurance (NCDOI) plays a regulatory role in overseeing the insurance industry within the state, including ensuring that underwriting practices comply with state laws and regulations. The NCDOI works to protect consumers, maintain fair practices in underwriting, and ensure that insurers follow established guidelines. While the NCDOI does not directly set premiums, it ensures that rates are justifiable and comply with state standards. Question 9. Which of the following factors would most likely be used by underwriters when determining a premium for a health insurance policy? A. The applicant's age and health status. B. The applicant's occupation and driving record. C. The applicant's geographical location and occupation. D. The applicant's claims history and occupation. Answer: A. The applicant's age and health status. Explanation: in health insurance underwriting, the two primary factors used to determine premium rates are the applicant's age and health status. Older individuals typically face higher premiums due to the increased risk of health issues, while those with poor health may also face higher premiums to reflect the likelihood of increased medical claims. Other factors, such as occupation or claims history, are more relevant in property or casualty insurance. Question 10. Which of the following best describes the purpose of using risk evaluation during the underwriting process? A. To reject applications from high-risk individuals. B. To determine the appropriate premium and coverage terms for a given applicant. C. To automatically approve or deny insurance applications. D. To assess the legal implications of issuing a policy. Answer: B. To determine the appropriate premium and coverage terms for a given applicant. Explanation: risk evaluation is a crucial part of the underwriting process that helps underwriters assess the level of risk posed by an applicant. Based on the risk evaluation, the underwriter can determine the appropriate premium rate and coverage terms to ensure that the insurer is adequately compensated for the risk it is assuming. This process does not automatically read or approve applications, but instead helps guide the insurer's decision on how to proceed with the policy. Question 11. Which of the following is an example of A moral hazard in insurance underwriting. A homeowner living in a high-crime area applies for a homeowner's policy. B. A driver with a history of multiple traffic violations applies for auto insurance. C. An individual deliberately neglects the maintenance of their property to increase their insurance payout after a loss. D. A small business owner insures a building against fire damage in a flood-prone area. Answer: C. An individual deliberately neglects the maintenance of their property to increase their insurance payout after a loss. Explanation: a moral hazard occurs when an insured individual or entity intentionally behaves in a way that increases the likelihood of a loss in order to gain from the insurance payout. Neglecting maintenance on a property to increase the chance of a claim is a classic example of moral hazard, as it reflects unethical behavior. Exploit insurance coverage. Question 12. In property insurance underwriting, which of the following factors would most likely lead to a higher premium? A. The insured's home being located in low-risk flood zone. B. The insured installing advanced fire suppression systems. C. The insured living in neighborhood with high crime rate. D. The insured maintaining history of no prior claims. Answer: C. The insured living in a neighborhood with a high crime rate. Explanation: a high crime area increases the likelihood of theft or vandalism, which poses a higher risk to the insurer. As a result, the premium for the policy would be adjusted to reflect the increased risk. Insurers factor in various risks, including the risk of loss from crime, when determining premiums for property insurance. Question 13. What is the purpose of preferred risk classification in underwriting? A. To classify applicants who are most likely to file claims and increase premiums. B. To provide low premiums to applicants who present minimal risk to the insurer. C. To deny insurance coverage for applicants with high-risk factors. D. To offer policyholders specialized coverage terms based on their risk profile. Answer: B. To provide low premiums to applicants who present minimal risk to the insurer. Explanation: preferred risk classification is used for individuals or entities that represent a low level of risk to the insurer. These applicants typically have no history of claims, exhibit favorable health or risk profiles, and are offered lower premiums because they are deemed less likely to cause a loss. Question 14. MS. Parker has been applying for health insurance, and the insurer is considering denying her coverage due to her pre-existing medical condition. Which of the following factors must the insurer consider before making this decision? A. Whether MS. Parker's condition is covered under the state's Medicaid program. B. Whether MS. Parker's condition is expected to require costly medical treatments in the near future. C. Whether MS. Parker's occupation presents higher risk of injury. D. Whether MS. Parker's chronic illness is related to previous insurance policy. Answer: B. Whether MS. Parker's condition is expected to require costly medical treatments in the near future. Explanation: in underwriting, insurers must assess the financial impact of pre-existing conditions. The potential cost of treating chronic illness could influence the decision to approve or deny coverage, or to impose exclusions or waiting periods. Pre-existing conditions are one of the primary factors in health insurance underwriting, especially evaluating future medical costs. Question 15. Scenario question. Mr. Adams, a small business owner, is applying for property insurance. During the underwriting process, the insurer learns that he has had multiple fire-related incidents at his business in the past 5 years. What is the most likely course of action the insurer will take? A. Reject Mr. Adams' application outright. B. Offer a policy with a higher premium to cover the risk of future incidents. C. Offer a policy with a reduced coverage limit for fire-related damages. D. Approve the policy with no changes, assuming the incidents were minor. Answer: B. Offer a policy with a higher premium to cover the risk of future incidents. Explanation: underwriting decisions are influenced by an applicant's history of claims. Multiple fire-related incidents suggest a higher risk, which means the insurer is likely to adjust the premium upwards to reflect the increased risk of future claims. This protects the insurer by ensuring the premium is adequate to cover potential future losses. Question 16. Which of the following would likely result in a risk being classified as substandard in underwriting? A. A young applicant with no prior health issues. B. A middle-aged applicant with a history of chronic heart disease. C. An applicant with no prior claims history. D. A person who lives in an area with low risk for natural disasters. Answer: B. A middle-aged applicant with a history of chronic heart disease. Explanation: Substandard risk classifications are applied to applicants who present a higher than average risk to the insurer, often due to factors like poor health, dangerous occupations, or high risk behaviors. In this case, the applicant's history of chronic heart disease would increase their health related risk, prompting substandard classification. Question 17. In health insurance underwriting, how does an applicant's occupation affect the underwriting process? A. It determines the premium based on the applicant's income. B. It is used to assess the risk of injury or occupational hazards that may lead to claims. C. It determines whether the applicant is eligible for group health insurance. D. It is irrelevant unless the applicant is self-employed. Answer. B. It is used to assess the risk of injury or occupational hazards that may lead to claims. Explanation. An applicant's occupation can be a significant factor in health insurance underwriting, especially if their job involves physical risks or exposure to hazardous materials. High-risk occupations may lead to higher premiums because the insurer perceives greater likelihood of injury or health complications that would result in claims. Question 18. Which of the following is a key principle that governs risk selection in the underwriting process? A. Insurers should only accept high-risk applicants to increase profitability. B. Insurers use underwriting to reject all applicants who have pre-existing conditions. C. Risk selection ensures that only applicants with acceptable risk profiles are insured. D. Risk selection is solely based on demographic characteristics such as age and gender. Answer. C. Risk selection ensures that only applicants with acceptable risk profiles are insured. Explanation. Risk selection is a fundamental principle of underwriting where insurers aim to accept only those applicants whose risk profiles align with the insurer's criteria. This helps ensure the insurer maintains balanced risk pool and avoids taking on excessive risk that would result in financial loss. It is not solely based on age or gender, but holistic assessment of various risk factors. Question 19. What role does automated underwriting play in the underwriting process? A. It determines all underwriting decisions without human input. B. It uses algorithms to assess risk and generate underwriting decisions quickly and consistently. C. It requires human oversight for all applications before approval. D. It exclusively handles property insurance applications and not health or life insurance. Answer. B. It uses algorithms to assess risk and generate underwriting decisions quickly and consistently. Explanation. Automated underwriting systems use algorithms and historical data to assess risks and make underwriting decisions efficiently. These systems streamline the underwriting process by providing faster, more consistent evaluations. However, human underwriters may still be involved in more complex cases that require or further analysis. Question 20. Which of the following is an example of legal hazard in insurance underwriting? A. An applicant working in a high-risk occupation like construction. B. A homeowner with a large number of pets that may increase the risk of accidents. C. An applicant whose home is located in a flood-prone area. D. An applicant who has filed multiple lawsuits against previous employers. Answer. D. An applicant who has filed multiple lawsuits against previous employers. Explanation. A legal hazard refers to risks related to the applicant's legal exposure. In this case, an individual who has history of filing lawsuits may present higher likelihood of future legal claims, which would increase the insurer's exposure to risk. This type of hazard is considered when evaluating applicants, especially in liability and casualty insurance. Question 21. Which of the following best describes the process of portfolio diversification in underwriting? A. Insuring only high-risk applicants to maximize returns. B. Spreading risk across multiple types of policies to minimize the impact of a single loss. C. Offering lower premiums to applicants with a clean claims history. D. Focusing only on low-risk applicants to reduce overall risk exposure. Answer. B. Spreading risk across multiple types of policies to minimize the impact of a single loss. Explanation. Portfolio diversification in underwriting involves spreading risk across different types of policies, industries, or geographical areas to ensure that the insurer is not overly dependent on any one source of risk. This approach helps minimize the financial impact of a single catastrophic event, as losses from one area can be offset by gains or stability from others. Question 22. What is the purpose of premium determination in underwriting? A. To determine how much coverage a policyholder will receive. B. To assess the financial standing of the insurer. C. To calculate the cost of insurance based on the risk associated with the applicant. D. To evaluate whether an applicant qualifies for life insurance. Answer: C. To calculate the cost of insurance based on the risk associated with the applicant. Explanation: premium determination is a crucial aspect of underwriting that involves calculating the cost of coverage based on the applicant's risk profile. Factors such as age, health, occupation, and claims history are considered to ensure that the insurer is compensated adequately for the risk of providing coverage. Question 23, scenario question. Mr. Williams, who has a history of diabetes, is applying for health insurance. The insurer requires additional medical information to evaluate his application. What is most likely to happen next? A. The insurer will immediately reject the application due to his pre-existing condition. B. The insurer will issue a policy with a waiting period before coverage begins for diabetes-related claims. C. The insurer will provide coverage with the same premium as healthy applicants. D. The insurer will offer Mr. Williams a policy with exclusions for all medical conditions. Answer: B. The insurer will issue a policy with a waiting period before coverage begins for diabetes-related claims. Explanation: pre-existing conditions such as diabetes often lead to specific underwriting requirements. In many cases, the insurer may apply a waiting period for coverage of conditions related to the pre-existing disease, meaning claims related to diabetes may not be covered for a certain period after the policy is issued. This helps mitigate the high risks associated with insuring individuals with chronic health conditions. Question 24. Which of the following is an example of an insurable interest in property insurance? A person who has no ownership or financial connection to a building but is concerned about its destruction. B. A homeowner who insures their primary residence against fire damage. C. A person who insures a friend's car without any financial stake in the vehicle. D. An individual who insures a building they intend to sell in the future. Answer: B. A homeowner who insures their primary residence against fire damage. Explanation: insurable interest is a fundamental requirement for purchasing insurance. It refers to the policyholder having a financial or legal stake in the insured item. A homeowner insuring their primary residence has insurable interest because they stand to lose financially if the property is damaged or destroyed. Without insurable interest, an individual cannot insurance on an item. Question 25. What is the purpose of risk retention in the underwriting process? A. To eliminate the possibility of a loss. B. To transfer all risks to the insurance company. C. To accept certain risks without seeking insurance coverage for them. D. To minimize the financial loss caused by a claim. Answer: C. To accept certain risks without seeking insurance coverage for them. Explanation: risk retention occurs when an individual or business decides to accept a certain amount of risk instead of transferring it to an insurer. This can happen when the cost of insurance is too high relative to the potential loss or when the risk is considered manageable by the insured. Risk retention is typically used for smaller or less severe risks. Question 26. Which of the following would most likely result in the rejection of an insurance application? A. The applicant has a stable income and no history of legal issues. B. The applicant has been convicted of insurance fraud within the last 5 years. C. The applicant has an average credit score and a clean driving record. D. The applicant resides in a region with a low probability of natural disasters. Answer: B. The applicant has been convicted of insurance fraud within the last 5 years. Explanation: a history of insurance fraud is a serious red flag for insurers. If an applicant has been convicted of fraud, the insurer may choose to reject the application due to the heightened risk of dishonesty and fraudulent claims in the future. This is a significant concern for insurers as it undermines the integrity of the insurance contract. Question 27. What is the primary purpose of a loss ratio in insurance underwriting? A. To determine the profitability of an insurer by comparing premiums to claims. B. To assess the quality of an insurance policy based on customer satisfaction. C. To calculate the risk of a claim being filed in the future. D. To determine the underwriting profit from premiums collected. Answer: A. To determine the profitability of an insurer by comparing premiums to claims. Explanation: the loss ratio is a key metric in insurance underwriting that helps determine the profitability of an insurer. It is calculated by dividing the amount paid in claims by the amount collected in premiums. A high loss ratio indicates that the insurer is paying out A significant portion of premiums in claims, which can reduce profitability, insurers aim for a balanced loss ratio that ensures financial stability. Question 20. Which of the following factors would typically not be considered in the underwriting process for a homeowner's insurance policy? A. The age and condition of the home. B. The applicant's credit history. C. The applicant's history of filing claims with previous insurers. D. The applicant's political affiliation. Answer D. The applicant's political affiliation. Explanation. Underwriting focuses on factors that are relevant to the risk of insuring an individual or property. These include the age and condition of the home, the applicant's credit history, and their claims history. Political affiliation is irrelevant to the underwriting process and cannot be used as criterion for insurance decisions. Question 29. What is a binding receipt in insurance underwriting? A. A document that provides coverage while the policy is being underwritten. B. A receipt issued after a claim has been paid to the policyholder. C. A binding agreement between the insured and the insurer regarding the terms of coverage. D. A temporary coverage agreement that only applies to certain types of policies. Answer A. A document that provides coverage while the policy is being underwritten. Explanation. A binding receipt is a temporary agreement issued by an insurer that provides coverage while the policy is being processed. It serves as a form of temporary insurance until the underwriting process is complete and the final policy is issued. If the insurer later rejects the application, the binding receipt may be invalidated. Question 30. Which of the following is a primary objective of underwriting in the insurance industry? A. To eliminate the possibility of any loss to the insurer. B. To evaluate the risk associated with applicants and decide whether to accept or reject them. C. To increase the profitability of insurers by offering discounts on premiums. D. To educate applicants about the benefits of various insurance products. Answer B. To evaluate the risk associated with applicants and decide whether to accept or reject them. Explanation. The primary objective of underwriting is to assess the risk associated with an applicant and determine whether that risk is acceptable to the insurer. Underwriting helps ensure that only those applicants who meet the insurer's risk criteria are accepted, and it aims to set premiums that reflect the level of risk.